When your practice is growing, you'll need to add more staff or start hiring staff. And while great staff can make the dream work, all staff members are an expense. Do you truly understand the financial view of hiring staff? My guest today does, and he advises his clients on staff expense and a lot of other business financial issues so that his clients can grow profitably. I'm Carl White, principal at Mark Advisory Group, which is a healthcare marketing agency, and I'm also the host of Practice Care. The mission for both is the same, and that's to help private practice owners stay private. Not only is that what they usually want, but care is better when the provider owns the practice because that's when they're going to have the most freedom they're ever going to have to make the clinical decisions they think are best. Unlike when somebody else owns them, usually, occasionally, sometimes, usually, their agenda starts to creep into the provider's ear. So let's just try to keep all that out and help them stay private. My guest today is Ken Weil. Ken is president of Consult Your CFO, which is a fractional CFO firm, CFO meaning Chief Financial Officer. Ken has more than 30 years of experience in corporate accounting and financial management consulting. He's served as a chief financial officer, controller, and project manager. He has experience working with both small businesses and Fortune 500 companies, and he's been involved in the integration of mergers and acquisitions, bringing order and structure to disorganized accounting departments. That sounds fun. And training and developing accounting staff to perform above their basic functions. Ken, thank you for coming on Practice Care today.
Thank you for having me, Carl.
Yeah, I appreciate it. This is going to be a very interesting one for a lot of reasons. But before we get into the meat of the topic, I want to start where I start with every guest. Tell us more about you, more than your bio can tell us. It had to be short. And I'm usually curious how somebody got into the line of work that they're in, but help us get to know you a bit better.
Yeah. So I went to college at Michigan State.
Okay.
Went was at the in the time it was in the 80s. So the brokerage business was growing. Mergers and acquisitions were gaining a lot of traction in that time. So I went the finance route at Michigan State.
Okay.
As I built up in my finance area, I was recommended to get a lot more into detail of accounting because everybody needs to scrub and analyze the information. So
Mm-hmm.
as I moved on through that, I got my finance degree from Michigan State with a emphasis in accounting.
Mm-hmm.
When I got out in the early 90s, Michigan was going through a major recession. So it was the whole everything related to cars,
Mm-hmm.
banking, industrial, all that. So there was not many opportunities there. So I moved back home to Maryland. And from there, I got a job working at a distribution company, Coca-Cola Enterprises in the Mid-Atlantic area. And I was a junior accountant and learned the ropes, the starting. And as I I left there, I got more into healthcare because healthcare was starting to grow in the 90s.
Mm-hmm.
And I moved up into S&P company, and they were public, and I was the youngest regional controller there, and I had 13 nursing homes / subacute facilities under my accounting department, and I merged a group into the company of subacute from another owner.
Okay.
And I moved up and I got to the point where I was the youngest and there was really no room for advancement at that time. So then I started going out and looking at other healthcare practices. So I went to a dental practice company, a radiology practice. Both of those went through mergers and acquisitions as well. So I helped integrate with them. And then at that point, I decided to move on to getting some Big Five experience, or now it's like Big Four. So I went to
Okay.
work for Deloitte Consulting and was involved with cleaning up Fortune 500 accounting books, putting policy procedure manuals together, and getting involved with systems, both from Lawson, which is mostly healthcare, and Hyperion, which is a reporting tool that sits on top of um, GL systems and consolidates and does a lot of analytical stuff. So after over 5 years there, I was on the road pretty much 6 days a week. Was getting kind of old. Wanted to start a family, and so I went to work initially at a boutique CPA firm that was starting up their CFO consulting practice.
Hmm.
And after 6 months, determined I could do this on my own. So after a year there, I left and started my own business. And I've been doing that for over 16 years now. I have two accounting managers that work through me now, a CPA that works through me doing 10Q and 10K for a pink sheet company.
Hmm.
I predominantly deal with a lot of clients in healthcare. Of the 33 years of experience, I would say majority of it has been with healthcare companies.
Okay.
I've dealt with a lot of physician practices, dental, radiology, um, pretty much veterinary, DDA providers, HMOs. I've been involved with a lot of different companies, and including on the healthcare manufacturing side as well for equipment and all that. So there's a lot of different aspects I've gone into on the healthcare. So I have pretty much a great understanding of what I do. I predominantly deal with startups, but up to the large companies as I get involved with. But a lot of them are probably the average are between 5 million and about 25 million.
Okay.
It's pretty much the sweet spot for kind of more consistent maintenance and review and growing the company.
Okay.
Once they get higher, then that gets to the point where they usually sometimes bring in a CFO permanent, and then a lot of times I'll go in and do special projects. If the CFO leaves, I jump in and help out and make sure things are moving forward. I've done a
Right.
lot of cleanup at big companies. I do mergers and acquisitions where they don't have that specialty at a bigger firm, but
Right.
majority of it is in monitoring and maintaining the accounting departments at medium sized firms.
Got it. So you know the numbers, man.
Yes.
Holy cow. You know the numbers. I still struggle with the visuals of debits credits. So I know they have to match. Sometimes it's on the left side, sometimes on the right side. It's just anyway. So that's why we're talking to you about this and not me. So we're talking about staffing and like the numbers behind it. I want to kind of talk about the what and then some of the why. Because and I hopefully we'll keep this kind of really kind of simple.
Mhm.
I know that's our goal. So when it comes to staffing, like what are the essential financial numbers that a practice needs to know? And just as a prelude to listeners, I talk with every guest before we start recording and we talk about the topic a bit. And so in the back of my mind, it's like, well, I need to know what the total number is, right? Because it's a big number. And I learned pretty quickly there's a little bit more to it than that if you really want to have a good finger on the pulse, not to the point where, it goes like 12 levels deep, but there's clearly more than that. So what are the essential financial numbers when it comes to staff that you advise private practice owners ought to know? Right? Their accountants can tell them, but you can't you got to know it yourself too.
Absolutely. You shouldn't rely on the CPA. You should know it yourself. I 100% agree with that. So let's just take a step backwards real quick before I get into the
Mm-hmm.
details. So from your chart of accounts structure, we'll just talk about the income statement. So you'll
Mm-hmm.
have your revenue, which is money you make, and that should specifically be direct revenue that you actually perform the services from. Then you have your cost of goods, which is your direct costs,
Mm-hmm.
and that is anything that is spent that drove that revenue, that direct
Mm-hmm.
revenue. And that the difference between the direct revenue and the cost of goods or the direct expense is your gross profit. And then that percentage of your gross profit dollar over your revenue is your gross profit percentage.
Mm-hmm.
So let's just stick to that section for now.
Mm-hmm.
Okay. In that cost structure, you have anybody who salaries, payroll taxes, we'll start with the that part. People have who are W-2s. Anybody who actually works and produces revenue should be in that direct cost section.
So
So
like if I go for an annual exam and a nurse draws blood, that's
correct.
part of it.
Yes, that would be that her time that she spent, her cost for that should be in that direct cost,
Right.
as
So
well
there's
as
the
her.
needle, there's the gauze, there's the vials, that's the supplies. But
Yes,
then
that's
there's her time as well, because
right.
if she didn't show up, I wouldn't have been able to complete my annual exam.
Correct.
Got it.
And if you have contractors that work there, so you have a nurse contractor in there,
Hmm.
or or therapy or all that that produce revenue, that
Hmm.
also should be in your direct costs.
Okay.
So anything that's direct cost related that generated a dollar of revenue should be in that section, and it should be broken out that way. So all your salaries and taxes should be subtotaled. Your if you use agency or subcontractors that produce revenue, that should be a separate line. And then you should have all your direct costs that were used to generate revenue.
Mhm.
So if you have administrative people or people who kind of do both, because some people are, I got a nurse and they do part admin of their time and part actual dealing with patient care, then their time should be broken out and proportion their payroll taxes and benefits between those two areas. So
Okay.
admin would be basically below your gross profit in the admin section for that person's time, and their costs should be in the direct cost section.
Okay.
And a lot of times I find when I deal with a lot of companies, including a lot of healthcare, they basically have people who do both and they do not break them out. So what they end up doing is it just messes up the gross profit percentage, because the gross profit percentage should be relatively consistent because it's a variable cost. So as the more revenue you produce, the percentage of cost should be relatively the same. So if I add more admin costs in there, which is more of a fixed cost because I need it to run the operations,
Right.
that messes up my gross profit percentage. So
Right.
as volume increases, my gross profit, my dollars of direct costs will go up, but my gross profit percentage should be relatively consistent. And if it fluctuates dramatically, then someone needs to figure out and research why that change occurred.
So let me go back and ask you the question for our listeners' benefit, the question I asked you that I mentioned a minute ago. If I know the total cost, so if my revenue is a million, and I've got profit after every last expense is subtracted, staff being one of them, um, so that I'm going to pay taxes and I'm going to have a profit. Why do I need to break out that nurse's time the way you described? Because there's some complication to it, right? There's got
Absolutely.
to make an estimate or whatever. But what why do I do it? What's the benefit to me of going that extra step to know, you know, to to know how much of that time, just to know
Right.
what's I'm just going to stop because I'm probably going to stumble all over it.
Yeah.
What's why is my practice better off by doing that as opposed to not?
So with your direct cost, like I mentioned, it's variable. It matches up with your revenue,
Mhm.
and that gross profit percentage should be stable and consistent. And that percentage, typically for a lot of clients that I deal with, are in the 50 to 55% range.
Okay.
Okay, so their cost should be 55% of their revenue,
Hmm.
and so that leaves them with a gross profit percentage between 50 and 45% roughly.
Okay.
So if they're consistent on how they apply their people and where they work, then that percentage is a guide for them to understand that when things change, say volumes change, COVID impacts again, they get an increase, dramatic surge of clients. That percentage should relatively be stable so that they can monitor their profitability specific to what they generate in revenue. Now, that if you commingle the two,
Hmm.
you lose that understanding of what they're doing on a revenue perspective and cost perspective, on the top line area, and you're messing up your admin. And your admin's fixed. So a good efficient admin is around 20%.
Okay.
So all my admin costs should be around 20%. So if I do everything right, on my admin costs, then I can better monitor and operate better using those numbers and ratios to run my business. If I put everybody in salaries in one bucket, I really have no clue, who's really generating me revenue and who's just doing work administratively. And then what ends up happening is they'll find out they end up spending too much on the admin side and having too much salaries, or they might be overstaffing and their profit margin dwindles quickly.
Okay. So, I mean, as you were describing this, I was thinking to myself, like, here's a scenario. So, because it gets to time, right? So if there's two nurses, Nurse John and Nurse Jane,
Mm-hmm.
and if you sort of divide up the cost of each, and you find that Nurse Jane costs less because either she's getting more patients done or just she's more productive, let's
Mm-hmm.
say, then you can look at that and say, hey, Jane, what are you doing that's different than John? Because you seem to be doing it better. And we've got a number that says, I mean, you might know that anyway, I guess, if patients aren't around as long or just she's seeing more, it's not getting backed up in the office. Um, then you might see it anyway. But I, is that an example? Would that be an appropriate use of once you've got these
Well,
numbers teased out?
there's two different things. There's the efficiency of the staff member, because that's more of an operational review to say, okay, how many clients have you seen today? How much revenue did you generate?
Mm-hmm.
And what your cost is associated with that.
Okay.
So that's to a certain person level. And
Mm-hmm.
and a lot of companies have that statistics because people are clocking in, clocking out, and monitoring their time very efficiently. So they know how much they're actually spending dealing with client care, and generating revenue versus doing administrative paperwork in the back.
Mm-hmm.
So what ends up happening is a lot of payroll systems, and if the company's big enough and has their own payroll department, they basically will break out departments if they have multi facilities, if they have one big facility, whatever. But they will have a person saying the nursing. So the nursing will have the direct cost piece, which for that facility, and all their time when they swipe in and swipe out dealing with the clients will be charged to the direct cost side, and then their portion of their admin will be charged to a separate admin department for that
Mm-hmm.
facility or site. And then those information from that report. The accounting department takes that information, and basically records that transaction into the financial system,
Right.
and therefore you're matching your revenue with your direct costs, and your admin costs are portioned
Yeah.
correctly.
I would
And
imagine maybe you'll tell me this is wrong, but for the typical private practice, it would make sense to say nursing staff, you are direct cost staff. You are here to help deliver the services that we provide. Don't go up front. Don't do admin unless it's really necessary. And admin staff, maybe this is easy. You're not qualified to go touch a patient or treat a patient, so
well, they
stay out of
can.
there. Yeah. So maybe that's the way to kind of do a clean break without like, doing like the time tracking or the how do you break down the salary into this bucket versus that bucket?
Right. Well, there's multitude of issues. So if the nurse, for the most part, the nurses will predominantly deal with client care. So
Mm-hmm.
for the most part, nearly most 100%. But there are going to be nursing admin people who are having to jump in and deal with clients,
Mm-hmm.
and at the same time they've got to do administrative, overseeing the administrative staff of the nurses.
Okay.
So they're going to be more of the breakout, where they're going to have to split between when they actually deal with the client
Mm-hmm.
versus dealing with administrative stuff. But at the same time, if there's multi sites, and say nurse A has to be split between two sites,
Mm,
then it's more critical that they punch in at one site, do their work, punch out at the same site, and then go to the next site and punch in and punch out.
mm-hmm.
So because if they don't, the revenue, the revenue will be booked to the two different sites, but on the direct costs, they might end up being in one site versus the other, throwing off the site
Yeah.
profitability.
So that's interesting. Do time tracking even if they're salaried, just so
Yes,
that you can say,
absolutely.
you're
They
supposed to
should.
be half and half, but you're really at each site, but you're really two-thirds, one-third. We need to look at that.
Right. And I have physician practices that, the physician is the owner,
Hmm.
and or they have multi owners. and I tell them they have to break out their time. So sometimes they're not very happy to do that.
Yeah, how do they react to this? Like you introduced this concept, and I get the value of it because you really see with granularity revenues, expenses, profit. I get it, but there's administrative detail involved, and everybody rolls their eyes at that initially.
Exactly.
So how do they react to this, and how do you get them over the hump to do it?
Well, most of them understand it when you discuss it with them,
Hmm.
and they understand the value of it. And so they go through the effort to break out their time, or at least determine how much time they spent doing client work versus administrative work, and they break down their timesheets. For the very difficult ones, and we have some physicians that are very difficult, what we try to do is we try to ask them to do it for like a week or two,
Hmm.
and to get an understanding of how they spend their time
Hmm.
and where they spend their time. And so we can sit there and say, okay, you spend 80% of your time dealing with client and 20% dealing with admin.
Hmm.
And so we use that estimation to break out their time
Okay.
and their costs. So then we can at least have a good rough estimate. And then every either quarter or every 6 months, we have them redo it and say, can you give us did anything change? Maybe they're, spending a lot more time in board meetings or administrative issues that are coming up versus dealing with clients, or they want to shift their work from dealing with clients to more administrative. Then we try to reevaluate that and reassess that and record
Okay.
that correctly.
And do those clients of yours, do they have their staff go through the same exercise?
Yes.
So what are some like big findings that you have? Like pick a, you don't have to say the name of the client, but I'm really curious. Like one where their time tracking showed, wow, we are out of whack. I'm curious like what that looked like and what they did.
Well, a lot of them, like I mentioned earlier, they wouldn't track direct costs versus admin, so they would just lump it all together and
Right.
say, "Look, I got on payroll, and here's my taxes."
But I
And
mean,
so,
so then they started tracking their time the way you want them to, and eventually they were, the exercise of tracking for the purpose of analyzing it was done. So I'm curious, like, what you found for like a client where you said, you think your splits are healthy, but they're really unhealthy, and here's what we found. I'm curious.
correct. So usually at that time when they call me, they're losing money and they don't understand why,
Okay.
and they see their numbers and that they're kind of clueless. And so when we start ripping it apart and splitting it out, we find, oh, you're overstaffing, or on the direct side, or your admin's too heavy. Why do you have all these admin people?
Mm,
And so then we have to reevaluate why we have those staff, and we either have to adjust them out or we have to cut, to get to the ratios that we feel is necessary to run the business efficiently.
okay. Interesting. And so that's like a client example recently. It was just
Oh,
so
I
now I
do this
see.
a lot to clients,
Yeah, you
and
do this to
yes,
clients.
it's unfortunately a consistent issue because that the a lot of the CPA firms, they just take the information from whatever accounting system they have, and they just put it all into a alphabetical um, kind of summary compilation
Hmm.
report. So it just says here's your revenue and lump sum, and here's all your expenses in alphabetical order. And then here's your bottom line.
Hmm.
But in regards to analytics and understanding how they're operationally efficient, that's not there.
Right.
So by ripping it out and recording it in the correct way, we can operationally understand what's going on and make adjustments accordingly.
Got it. So typical when you get called, it is we're in the red and we just don't understand how or why.
Right.
Okay. Do you ever get people to say, we're in the black, but we'd like to be better? We think we could
Yes,
be
I
better.
do, but usually it's more the other way, unfortunately. And
Yeah.
I unfortunately have had companies call me up, and they're basically trying to barely make payroll.
Hmm.
And when you start asking, well, do you have a credit line? Do you have any of this stuff? And they go, no, we don't. Then it's like, well, you're pretty much going to have a very hard time turning it around because you can't just walk in and turn around in a day.
Hmm.
It'll take, it could take weeks, it could take months, depending on how big the company is
Right.
and how much you have to change. And
Okay.
so if you don't have a credit line, you don't have any support, and no funding, you've got a big issue.
Yeah.
And that's
So
something that had been called months ago before they
yeah.
got to that. And that's why I tell a lot of clients to do cash flow projections so they can see, 6 months to a year in the future and roll it constantly to see, where the bumps are on the road. And if things are cash is starting to go down,
Mhm.
then we need to reassess what's going on.
Yeah. Had a guest recently who was getting pretty granular with that. I mean, she was even saying she works a lot with like speech therapists and occupational therapists.
Mm-hmm.
She's like, look, there are certain times of the year where it's slower. August, people go on vacation. You got to
Yep.
plan a dip because you have to know what's coming. It's chunky money.
Yep.
What are good financial ratios? Like, I guess even for like the direct call, you sort of said them before, but let's dig into them. Direct costs, admin costs, what it
Yeah,
needs to
I
spend.
shoot for 50%. So my direct costs, my aim is like 50% to 55% of my revenue.
Mm-hmm.
And my admin, my goal, if the company's really good, 20% is a good number of
Okay.
the admin costs should be 20% of my revenue.
Mm-hmm.
Um, if it's a younger, smaller company, you might get to 25%. And if it's a bigger, more efficient company, it could get down to 15%.
Okay.
So that's kind of what I do. So I look at those once I rip the thing apart, then we can look at it and say, hey, what's going on? So
Okay.
sometimes I go into clients and we look at, they have multi-site practices.
Okay.
So, I look at the revenue, I look at their costs, and then you can compare multi-sites and you'll see, oh, this one's really high, this one's really low. And then you can sit there and analyze why is one more efficient than the other. Sometimes they're just not, like I mentioned earlier, they're not, someone's moving back and forth
Mm-hmm.
and they're not the ones getting charged the site, and the other one's not. Maybe
Yeah.
they have too much overtime. So then we have to address reducing the overtime, figuring out better staffing structures to keep the costs down, to keep their gross profit percentage in check. So
Yeah.
there's a lot of different things. And then when it comes to the costs, supply costs, is there other ways of reducing costs? Better vendor relationships, better reductions in bulk versus the way
Sure.
they're purchasing it and stuff like
Sure.
that, to keep the costs down as well.
Okay. So, well, we could go further, as I say to every guest, but we're here, we're in the business of bite-sized advice for private practice owners in our practice care. So a couple of wrap-up questions. First, in the context of what we're talking about, is there anything you think I should have asked you, but I just didn't ask that listeners ought to know about?
No, just that it's very important, like you mentioned, to make sure that the financials are representative of current operational numbers. And so you can really look at it and understand, is the company performing month to month on the way it needs to be?
Yeah. I mean, one thing I particularly like about this topic is um, at the end of the day, sounds cold, but it's about the profit. You're on a mission, Dr. X, to do good. Of course you are. But if you can't do it profitably, you won't be able to do it for anybody. And so, in order to be able to do it long term, the profit's got to be there. And there's two levels of profit. There's called gross profit, what you said. So there's that lab test. What's, if you can get $100 for it and it costs 25 to deliver it between the nurse time and all the supplies, that's 75. That's really important to know. And then everything between 75 and what you pay taxes on is the rest. And probably staff cost is pretty big. So it's really important to know what's driving that and is that the right balance where it should be. So I love that. The other
Right. And
question that I ask everybody is, all right, so got somebody listening and they're thinking about the profitability of their practice. It's either not where it wants to be, they want it to be, or it's in the red. And we've caught their attention on this topic. Sometimes can people get stuck at the starting line? So if you could give them one or two pieces of like advice, simple things they could do to, get off the starting line and get going down the path of figure out my profitability levels, where would you recommend they start?
there's a couple ways they can look at things. First, they pull their payroll reports
Mm-hmm.
and they go through person by person and determine, is this person direct or this person admin?
Okay.
And they break out, make sure their departments are structured in a way that within the payroll system, that their direct costs are in one section, whether it's, if it's multi-site, that they're in a specific site, if it's one site, that they're all strictly direct, and then their admin is in a separate piece. If they're, like we mentioned earlier, if the one person is shared between admin and direct, are they breaking out their time? And if not, you need to talk to them as well as the payroll person to make sure that they're categorizing and breaking out their time so
Okay.
that the payroll taxes are also and benefits are allocated correctly between. So
Mm.
that's that piece. And then with the contractors, just make sure the contractors that are direct are in the direct side versus if you hire a consultant that's a contractor, they're not being dumped into to
Right.
direct, they're sitting in admin.
Right.
And
So
the
take the
benefit,
names of all the staff and make three piles.
yep,
Direct, they're involved with treating patients only. Pile two, they're involved in the administrative side of this practice only. Pile three, there's some sort of mix. And
right,
then break out the mix and total it all up and see what you get.
right. And then that's how it should be portrayed onto the financial report.
Right. And then look at the 50% margin, look at the 20% margin, and just use Ken's numbers as a starting point. You'll figure out what's best for you, but start there and just stare at it. But does it seem to make sense? And then, yeah, go from there. I love it. Excellent. Ken, thank you for coming on. Practice care. It's a important topic, kind of a complicated topic, but hopefully we've demystified it at least a little bit. So thank you for coming on Practice Care. I really appreciate it.
Thank you very much again. Thanks,
Yeah,
Carl.
so yeah, we're going to put all of Ken's contact info in the show notes for this episode. So anybody who Ken caught your attention, you want to contact him, you'll be able to do it easily. And a couple of points before we wrap up. First, if you have some experience on the business side of private practice, let's say you're a practice owner that you think others would benefit from, or if you are someone like Ken or I that seeks to serve private practice owners, either way, we want you to come on Practice Care so that you can share your experience and your expertise with the world. In the show notes for Ken's episode and every episode, there's a link, a couple of questions. Tell us what's on your mind so we can get you scheduled as soon as possible. And finally, we do a new episode every week. Please subscribe so that you can stay up to date. You'll be notified. We are on Apple, we're on Spotify, we're on Google, Amazon, just about every player and platform. We're also on YouTube. Make sure you subscribe so that you can stay up to date easily. Thanks very much, and until next time.